Based on the provided data, the trend for Bitcoin appears to be slightly bearish. While there were periods of upward movement, the overall trajectory suggests a downward direction. The forecast data further reinforces this bearish outlook, with prices predicted to decline consistently over the next week. Considering this trend, a short position is recommended. The entry price for this short position should be around $92,700, the first predicted price in the forecast data. A stop-loss order should be placed at $93,600, slightly above the recent high and the upper Bollinger Band. This will help mitigate potential losses if the market unexpectedly reverses. The target price for this trade is $85,500, the lowest predicted price in the forecast data, representing a significant potential profit. This strategy leverages the bearish trend, supported by the forecast data and technical indicators, aiming for a substantial return. Based on the provided data, Bitcoin Cash appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend will continue. The support and resistance levels further reinforce this view, with the resistance price consistently higher than the closing prices. Therefore, a bearish strategy is recommended. A suitable entry point would be around $298, the first forecast price. The stop-loss order should be placed above the recent swing high at $308, limiting potential losses. The target price could be set at $277, the bottom of the Bollinger Bands during the recent period. This strategy also incorporates the RSI indicator, aiming to enter a position when the RSI dips below $30, indicating oversold conditions. Additionally, the Bollinger Bands suggest a potential breakout below the lower band, further supporting the bearish outlook. Based on the provided data, the trend for stacks appears to be bearish. The price has been declining over the past 2 weeks, and the forecast suggests further downward movement. The RSI indicates that the asset is oversold, which could suggest a potential short-term bounce. However, the bearish trend and the forecast data suggest caution. A potential strategy could involve a short position with an entry price around $0.89. The stop-loss could be set at $0.94 to limit potential losses if the price rebounds. The target price could be set at $0.78, aligning with the forecast and the support level. This strategy leverages the bearish trend and the oversold condition while managing risk with a defined stop-loss. Based on the provided data, Ethereum appears to be in a volatile sideways trend with a slight upward bias. The historical price data shows fluctuations around the support level of $2,440, with resistance at $2,590. The forecast data suggests a potential pullback in the coming week, with prices potentially dipping below $2,600. Considering these factors, a potential strategy could involve entering a long position around $2,560, with a stop-loss order placed at $2,520 to manage risk. The target price could be set at $2,700, aiming for a potential upside of around 5%. This strategy leverages the slight upward trend while incorporating risk management measures. Additionally, the RSI and Bollinger Bands can be used to confirm potential entry and exit points. For example, buying when the RSI is oversold below $30 and selling when it reaches overbought levels above $70. The Bollinger Bands can also provide insights into potential price breakouts or reversals. Based on the provided data, XRP appears to be in a short-term downtrend. While there are some upward spikes, the overall trajectory suggests a potential decline. The forecast data further reinforces this trend, projecting a decrease in price over the next week. Considering these factors, a short position could be considered. A suitable entry price would be around $2.57, coinciding with the recent price dip and the resistance level. To manage risk, a stop-loss order could be placed at $2.68, slightly above the recent high and the upper Bollinger Band. The target price could be set at $2.29, aligning with the forecast data and the support level. Utilizing RSI as a secondary indicator, we see that the current RSI value is $46.80, indicating a neutral position. However, the RSI has been fluctuating within a relatively narrow range, suggesting a potential for a breakout. If the RSI breaks below $40, it could further confirm the downtrend and strengthen the case for a short position. The Bollinger Bands also support this strategy, as the price has been consistently trading below the middle band, indicating a bearish momentum. Furthermore, the price is approaching the lower Bollinger Band, suggesting a potential for a bounce or a further decline. Based on the provided data, Binance Coin appears to be in a consolidation phase, with a slight downward bias. The historical price action shows a range between the support level of $576 and the resistance level of $668. The forecast prices suggest a continuation of this consolidation, with a slight dip below the current price. Considering the RSI, the oversold level is $20, and the overbought level is $80. Currently, the RSI is hovering around $41.50, indicating a potentially oversold condition. The Bollinger Bands suggest a tightening of the price range, indicating a potential breakout in either direction. Therefore, a long position could be considered with an entry price around $615, a stop loss at $576, and a target price of $668. This strategy aims to capitalize on a potential bounce back from the oversold condition and a breakout above the resistance level. Based on the provided historical and forecast data, Stellar appears to be in a short-term downtrend. The price has been declining over the past 2 weeks, and the forecast suggests further decline in the coming week. The RSI is hovering around the neutral level, indicating a lack of strong momentum in either direction. The Bollinger Bands are constricting, suggesting a potential for a breakout in either direction. A potential strategy is to sell Stellar at the current market price of around $0.298, with a stop-loss order placed at $0.313, the recent resistance level, and a target price of $0.279, the lowest forecast price. Alternatively, we could wait for a confirmation of the downtrend by a break below the support level of $0.246. This would provide a more definitive entry signal. In this case, we would enter a short position at the break below $0.246, with a stop loss at $0.255, a few points above the breakout level, and a target price of $0.279. Based on the provided data, Toncoin appears to be in a downtrend. The historical price data shows a consistent decline over the 2 weeks, and the forecast data suggests this trend will continue for the next week. The RSI indicator is hovering around $30, indicating oversold conditions, which could potentially lead to a short-term rebound. However, the price action is still within the downward sloping Bollinger Bands, suggesting a continuation of the downtrend. Therefore, a bearish strategy is recommended. Enter a short position at the current market price of $3.42. Set a stop-loss order at $3.56, above the recent high and the upper Bollinger Band. The target price is $3.36, based on the forecast data and the lower Bollinger Band. This strategy aims to capitalize on the ongoing downtrend while managing risk with a tight stop-loss. Based on the provided data, Cardano appears to be in a sideways trend with a slight bearish bias. The historical price data shows fluctuations within a range, with the recent forecast indicating a potential dip below the current support level. The RSI oscillates around the neutral level, suggesting a lack of strong momentum in either direction. However, the RSI dipped below $40 in the last week, indicating potential oversold conditions. Therefore, a potential strategy could involve a long position with an entry price around $0.686, the lowest forecast price. The stop-loss order should be placed below the recent support level at $0.613, limiting potential losses. The target price could be set at $0.753, the recent resistance level, aiming for a potential upside of 9%. This strategy leverages the potential for a rebound from oversold conditions and the historical resistance level as a potential profit target. Based on the provided data, Litecoin appears to be in an upward trend. The historical price data shows a consistent increase, with the forecast data suggesting continued growth. The support price of $103 provides a strong base, while the resistance price of $135 presents a potential ceiling. A suitable entry point could be around $122, taking advantage of a potential pullback near the support level. A stop-loss order should be placed at $118 to minimize potential losses. The target price could be set at $130, aiming for a 6.5% return. This strategy combines the upward trend, support level, and potential for profit. Based on the provided data, Coin appears to be in a short-term downtrend. The price has been steadily declining over the past 2 weeks, with the forecast suggesting further downward movement in the coming week. The RSI indicator is hovering around oversold levels, suggesting potential for a short-term bounce. However, the price is also approaching the lower Bollinger Band, indicating a strong possibility of continued downward pressure. Therefore, a cautious short position could be considered. Enter a short position at the current market price of $3.03. Set a stop-loss order at $3.15 to limit potential losses if the price unexpectedly rebounds. The initial target price could be set at $2.80, aligning with the lower Bollinger Band and the forecast price. Close the position at the target price or adjust the stop-loss accordingly if the price continues to decline. Remember to carefully manage risk and adjust the strategy based on market conditions. Based on the provided data, Aptos appears to be in a short-term downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the forecast data suggesting this trend will continue for the next week. The RSI, hovering around the $35 to $40 range, indicates the asset is oversold but not excessively so. The Bollinger Bands, while narrowing, suggest a potential for increased volatility in the coming days. A conservative strategy could involve entering a short position at the current price of $5.96, with a stop-loss order placed at $6.02 to limit potential losses. The target price could be set at $5.49, the first forecast low for the coming week. This strategy capitalizes on the potential for continued downward pressure while managing risk effectively. Based on the provided historical and forecast data, SE appears to be in a slight upward trend. The support price of $0.242 offers a strong base, while the forecast prices suggest potential for further growth. Considering the RSI, a long position could be initiated when the RSI crosses above $50, indicating bullish momentum. A suitable entry price would be around $0.253 based on the forecast. To manage risk, a stop-loss order should be placed below the recent support level at $0.242. The target price could be set at $0.279, aligning with the recent resistance level and the upward trend. Alternatively, we can utilize the Bollinger Bands to identify potential price movements. When the price approaches the lower Bollinger Band, it often signals a buying opportunity. A long position could be entered when the price bounces off the lower Bollinger Band, which is currently around $0.201. The stop-loss order should be placed below the lower Bollinger Band for added protection. The target price could be set at the upper Bollinger Band, which is currently around $0.378. This strategy capitalizes on the potential volatility of SE. Based on the historical and forecast data, Ethereum Classic appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, and the forecast predicts further downward movement in the coming week. The support price of $18.1 provides a potential floor for the price, while the resistance price of $19.50 acts as a barrier to upside movement. Therefore, a bearish strategy is recommended. Enter a short position at the market price when the price touches the resistance level of $19.50. Set a stop-loss order at $18.1 to limit potential losses. The target price is set at $17.80, which is a significant support level in the historical data. This strategy leverages the downtrend and the support/resistance levels to potentially generate profits. Based on the provided data, Polygon appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data predicts further downward movement. The RSI, while currently below $30, indicates potential oversold conditions, suggesting a possible short-term bounce. However, the overall trend suggests a bearish outlook. Therefore, a short position is recommended. A suitable entry price would be around $0.297, the price at which the downtrend is expected to continue. The stop-loss order should be placed at $0.307, above the recent high, to minimize risk. The target price could be set at $0.249, the lowest point predicted in the forecast data, aiming for a potential profit of approximately $16%. This strategy leverages the downtrend and oversold conditions while managing risk with a well-defined stop-loss order. Based on the provided data, AEVO appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, and the forecast data suggests this trend will continue for the next week. The RSI indicator is also below $50, further supporting the bearish sentiment. A potential entry point for a short position could be around $0.155, with a stop-loss order placed at $0.166, the recent resistance level. The target price could be set at $0.122, which is the lowest predicted price in the forecast data. This strategy utilizes the price trend and the RSI indicator to identify a potential short opportunity. Based on the provided data, optimism appears to be in a sideways trend with potential for upward movement. The historical data shows price fluctuations within a range, but the forecast data suggests a potential dip in the coming week. A long position could be considered if the price dips towards the support level of $0.924. A suitable entry price would be 93 cents dollars with a stop-loss order placed at 91 cents dollars to limit potential losses. The target price could be set at $1.15, aiming for a profit of approximately $24%. This strategy leverages the potential for a rebound from the support level and the upward trend indicated by the forecast data. Additionally, the RSI, currently around $37.50, suggests the asset is not overbought, further supporting a long position. The analysis of STRK suggests a potential downtrend in the coming week. Historical price data shows a general downward movement, with the forecast prices further reinforcing this trend. The RSI indicates that the asset is currently oversold, potentially presenting a buying opportunity. However, the Bollinger Bands suggest a possible continuation of the downward movement as the price is trading below the middle band. Therefore, a conservative strategy would be to enter a long position at the support level around $0.182, based on historical lows and the forecast low. The stop-loss should be placed below the recent low at $0.175 to limit potential losses. The target price could be set at $0.205, aiming for a $12% return. This strategy combines the oversold RSI signal with the potential for a bounce off the support level, while acknowledging the bearish trend indicated by the Bollinger Bands. Based on the provided data, Solana appears to be in a downtrend. The historical price data shows a consistent decline, with the forecast data predicting further downward movement. The RSI, currently at $25.70, indicates oversold conditions, suggesting a potential for a short-term rebound. However, the bearish trend and the forecast price decline suggest caution. A possible strategy is to enter a short position at the market price, around $142, with a stop-loss order placed above the recent resistance level at $157. This would limit potential losses. The target price could be set at $132, based on the forecast data and the support level of $139. This strategy leverages the oversold RSI and potential short-term rebound while acknowledging the overall downtrend. Based on the provided data, Jupiter appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend will continue. The RSI indicates that the asset is not oversold, hovering around the neutral level. However, the Bollinger Bands show that the price is approaching the lower band, suggesting potential for a bounce. Therefore, a conservative strategy would be to wait for a bounce off the lower Bollinger Band and enter a long position with a stop-loss order placed slightly below the recent low of $0.689. The target price could be set at the next resistance level, which is $0.727. This strategy leverages the potential for a short-term rebound while minimizing risk. Based on the provided data, render appears to be in a downtrend. The historical price data shows a consistent decline, supported by the forecast data, which predicts further price drops. The RSI indicator is hovering below $40, suggesting oversold conditions, but with a potential for further decline. The Bollinger Bands are contracting, indicating a period of consolidation before a potential breakout. Therefore, a bearish strategy is recommended. Enter a short position at the market price, with a stop-loss order placed at $3.85, the high of the recent consolidation period. The initial target price is set at $3.28, the lowest forecast price. Close the position at the target price or adjust the stop-loss accordingly if the price shows signs of reversal. Based on the provided data, Solana name service appears to be in a downtrend. The historical price data shows a consistent decline, supported by the falling RSI and the price action consistently trading below the Bollinger Band's middle line. The forecast data further strengthens this bearish outlook, predicting a continued decline in price. Therefore, a short position is recommended. A suitable entry point would be around $0.138, the closing price on February 24th. The stop-loss should be placed above the recent high at $0.146, limiting potential losses. The target price could be set at $0.106, the predicted price for March 1st, based on the forecast data. This strategy leverages the downtrend identified through price action and technical indicators, aiming for a profitable short position. Based on the provided data, Doge-Coin appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data predicts further drops in the coming week. The RSI is below $50, indicating bearish sentiment, and the price is trading below the $20 day moving average. A potential strategy would be to enter a short position at the current market price around $0.243. The stop-loss could be set at $0.251, the recent resistance level, to limit potential losses. The target price could be set at $0.211, the next significant support level, based on the historical data. This strategy leverages the downtrend and utilizes support and resistance levels for risk management. Based on the provided data, PEPE appears to be in a sideways trend with a slight downward bias. The historical price data shows fluctuations around the support and resistance levels, with the recent forecast suggesting a continued downward movement. Therefore, a conservative strategy could involve entering a short position at the resistance level of $0.000000890, with a stop-loss placed at $0.000000960 and a target price set at $0.000000720, the identified support level. This strategy utilizes the potential downward trend and the established support and resistance levels. Based on the provided historical and forecast data, SHIB appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, and the forecast predicts further declines in the coming week. Support is at $0.0000133, while resistance sits at $0.0000140. Given this trend, a short position could be considered. A suitable entry price would be around $0.0000156, with a stop-loss order placed at $0.0000137 to limit potential losses. The target price could be set at $0.0000133, aiming to capture the expected price decline. Additionally, the RSI indicator suggests potential oversold conditions in the near future, further supporting a short position. The RSI is currently at $32.60, approaching the oversold level of $20. This could indicate a potential bounce back, but given the overall downtrend, a short position with a tight stop loss could be a prudent strategy. The Bollinger Bands show price consistently trading below the middle band, reinforcing the bearish outlook. Therefore, a short position based on the combination of trend analysis, RSI oversold conditions, and Bollinger Band positioning appears to be the most efficient strategy for this scenario. Based on the provided data, Dog with Hat appears to be in a downtrend. The historical price data shows a consistent decline, with the forecast data predicting further drops. The RSI indicates potential oversold conditions, suggesting a possible short-term rebound. However, the overall trend and the Bollinger Bands, which are contracting, point towards continued downward pressure. Therefore, a bearish strategy is recommended. A suitable entry point would be around $0.535, the upper boundary of the Bollinger Bands on February 25. The stop-loss order should be placed at $0.553, slightly above the recent high, to limit potential losses. The target price could be set at $0.436, the forecast price for March 1st, anticipating a continuation of the downtrend. This strategy combines the bearish trend with the potential oversold bounce, aiming to capitalize on the predicted price decline. Based on the provided data, Doge-Coin appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data predicts further downward movement. The RSI indicator is currently below $30, suggesting oversold conditions. However, the Bollinger Bands are narrowing, indicating a potential for a breakout in either direction. Considering these factors, a short position could be considered. A suitable entry price would be around $0.0029, with a stop-loss order placed at $0.0031 to limit potential losses. The target price could be set at $0.0024, based on the forecast data and the downtrend. This strategy leverages the potential for a continuation of the downtrend, with a focus on risk management through a defined stop-loss. Based on the historical data and forecast, Near Protocol appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, and the forecast suggests this trend will continue. The RSI indicator also supports this view, as it has been hovering below the $50 level, indicating bearish momentum. Therefore, a short position is recommended. A good entry price would be around $3.07, which is the recent low and coincides with the support level. The stop-loss order should be placed above the recent high of $3.48 to limit potential losses. The target price could be set at $2.89, which is the lowest point in the forecast. This strategy utilizes the downtrend and the RSI to identify a potential short opportunity. Based on the provided data, Internet Computer appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data predicts further downward movement. The RSI indicator also supports this downtrend, hovering below $50 for most of the period and indicating bearish momentum. The Bollinger Bands are also contracting, suggesting a potential for a further price drop. Therefore, a short position strategy is recommended. Enter a short position at the current market price of approximately $6.48. Set a stop-loss order at $6.76, the resistance level, to limit potential losses. The target price for this trade could be $6.07, based on the forecast data and the potential for further downward movement. This strategy leverages the identified downtrend and utilizes technical indicators to manage risk and maximize potential returns. Based on the provided historical and forecast data, Injective appears to be in a volatile sideways trend. While the price has fluctuated between support at $7.81 and resistance at $15.30, the recent forecast suggests a potential downward movement. A cautious long position could be initiated around $13.90, the predicted low for February 25. The stop loss should be placed at $13, below the recent low, to limit potential losses. The target price could be set at $15.30, the resistance level, aiming for a potential $10% return. This strategy utilizes the forecast data and support/resistance levels to identify a potential entry point with a defined risk and reward profile. Based on the provided historical and forecast data, BTC appears to be in a volatile downtrend. The price has consistently fallen over the past 2 weeks, with the forecast suggesting a continuation of this downward movement. Support is holding at $391, but resistance is strong at $432. A strategy based on this trend would involve shorting BTC when it approaches the resistance level. A bid entry point would be around $425, with a stop-loss order placed at $435 to limit potential losses. The target price could be set at $385, aiming to capture the anticipated downward movement. Additionally, we can incorporate RSI and Bollinger Bands into the strategy. An RSI reading below $20 suggests oversold conditions, potentially offering a buying opportunity. Conversely, an RSI above $80 indicates overbought conditions, suggesting a potential selling opportunity. The Bollinger Bands can also provide insights into volatility and potential price reversals. If the price breaks below the lower Bollinger Band, it could signal a further downward move, reinforcing the short position. Conversely, a breakout above the upper Bollinger Band could suggest a potential reversal, prompting a reassessment of the position. Based on the provided historical and forecast data, THETA network appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, and the forecast suggests continued downward movement. The support level at $1.02 provides a potential buying opportunity, but caution is advised due to the overall bearish trend. A suitable strategy could involve entering a long position at the support level of $1.02. The stop-loss order should be placed below the support level at 98 cents to limit potential losses. The target price could be set at $1.22, which represents the resistance level. This strategy leverages the potential for a bounce from the support level while mitigating risk with a tight stop-loss. Based on the provided data, WorldCoin appears to be in a downtrend. The historical price data shows a consistent decline, with the forecast data projecting further downward movement. The RSI, while fluctuating, remains below $50, indicating bearish sentiment. The Bollinger Bands are narrowing, suggesting a potential for a breakout in either direction, but the overall trend suggests a downward move. Therefore, a short position is recommended. Enter a short position at the current market price, with a stop-loss order placed at $1.15, slightly above the recent low. The target price is set at 95 cents, aligning with the forecast data and potential support levels. This strategy utilizes both the overall trend and technical indicators to capitalize on the anticipated downward price movement. Hooked Protocol shows a downward trend over the past 2 weeks, with the price dropping from $0.191 to $0.176. The forecast for the next week also indicates a continued downward trend, with prices predicted to fall below 18 cents. Based on this, a short position could be considered. A suitable entry price for a short position would be around $0.184, the predicted opening price for February 25. The stop-loss could be set at $0.188, slightly above the entry price, to limit potential losses. The target price could be set at $0.167, based on the forecast and the historical price trend. This strategy leverages the predicted downward trend and the RSI indicator, which suggests potential oversold conditions. Based on the provided data, Artificial Superintelligence Alliance appears to be in a downtrend. The historical price data shows a consistent decline, with the forecast data predicting further drops. The RSI indicator, while fluctuating, remains below $50, suggesting bearish sentiment. The Bollinger Bands are also converging, indicating a potential for consolidation or further downward movement. Therefore, a bearish strategy is recommended. Enter a short position at the market price, around $0.673, on February 25, set a stop-loss order at 73 cents, the recent resistance level, to limit potential losses. Aim for a target price of $0.558, the strong support level, for a potential profit of approximately $17%. Monitor the RSI closely for oversold conditions, which could signal a short-term bounce. However, the overall trend suggests a continued downward trajectory. Based on the provided data, Polkadot appears to be in a downtrend. The historical prices show a consistent decline over the past 2 weeks, and the forecast data suggests this trend will continue. The RSI indicator, currently at $33.1, is below the oversold level of $20, indicating potential buying pressure. However, the price is approaching the support level of $4.32, and a break below this level could further accelerate the downtrend. Therefore, a conservative strategy would be to wait for a bounce off the support level around $4.32 before entering a short position. The entry price would be around $4.38, with a stop-loss placed at $4.45 to limit potential losses. The target price could be set at $4.15, based on the forecast data and the downtrend. This strategy combines the oversold RSI reading with the potential support bounce to enter a position with a defined risk and reward profile. Based on the provided historical and forecast data, Filecoin appears to be in a downtrend. The price has been consistently decreasing over the past 2 weeks, and the forecast predicts further decline in the coming week. The support price of $3 provides a potential buying opportunity. We can enter a long position at $3 with a stop-loss order placed at $2.95 to limit potential losses. The target price is set at $3.18, which represents the resistance level and a potential profit of 5.67%. The RSI indicator shows that the asset is oversold, suggesting a potential for a price rebound. However, the Bollinger Bands indicate a continuation of the downtrend as the price remains below the middle band. Combining these signals, we prioritize the trend-following strategy based on the historical price movement and support/resistance levels. Based on the provided historical and forecast data, Conflux appears to be in a sideways trend with a slight upward bias. The price has been consolidating between the support level of $0.102 and the resistance level of $0.115. The RSI indicator is currently hovering around $40, suggesting that the asset is not overbought or oversold. The Bollinger Bands are also relatively narrow, indicating a period of low volatility. Given these observations, a potential strategy could involve a long position with an entry price around $0.108, a stop-loss price at $0.102, and a target price at $0.115. This strategy aims to capitalize on a potential breakout above the resistance level. The stop-loss price is placed below the support level to limit potential losses. The target price is set at the next resistance level. However, it is important to note that this is just a suggestion, and traders should always conduct their own research and risk management before making any investment decisions. Based on the provided data, Ethereum name service appears to be in a sideways trend, fluctuating between the support level of $19.40 and the resistance level of $27.70. The RSI oscillates between $35.50 and $48.80, indicating neither extreme overbought nor oversold conditions. The Bollinger Bands show a tightening pattern, suggesting a potential breakout in either direction. A potential strategy could involve waiting for a clear break above the resistance level of $27.70. This breakout would signal a potential bullish trend. A buy order could be placed at the breakout price, with a stop-loss order placed below the recent swing low, around $24.30. The initial target price could be set at the upper Bollinger Band, currently around $28.30. This strategy leverages the potential for a breakout while managing risk with a defined stop-loss. Based on the provided data, Avalanche appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend will continue for the next week. The RSI indicator also supports this view, with values remaining below $50 for most of the period. A good entry point for a short position would be around $24.50, as this level represents a recent resistance turned support. A stop-loss order should be placed at $25.80, the recent high, to limit potential losses. The target price for this trade could be $20.10, the identified support level. This strategy utilizes both the price action and the RSI indicator to identify a potential short opportunity. Remember to always manage your risk and adjust your strategy based on market conditions. Based on the provided historical and forecast data, Doge-Coin appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, with the forecast suggesting further downward movement in the coming week. Considering this trend, a short position could be considered. A suitable entry price would be around $0.0300, with a stop-loss order placed at $0.0316, the recent resistance level, to limit potential losses. The target price could be set at $0.0268, the lowest forecast price for the coming week, aiming for a potential profit of approximately 10%. In addition to the trend-based strategy, the RSI indicator suggests potential oversold conditions. The RSI has been hovering below $40 for several days, indicating a potential for a price rebound. However, the overall downtrend and the forecast price movement suggest caution. Combining this with the Bollinger Bands, which show the price trading close to the lower band, further strengthens the case for a short position. Therefore, the overall strategy prioritizes the trend-based approach with a stop-loss and target price as outlined above. Based on the provided data, PENDLE appears to be in a short-term downtrend. The price has been steadily declining over the past 2 weeks, with support holding around $2.62. The forecast data suggests this downtrend may continue, with prices predicted to drop below $3 in the coming week. RSI indicates the asset is not oversold, suggesting there is room for further downside. Given this analysis, a bearish strategy is recommended. Enter a short position at the market price, with a stop-loss order placed at $3.23, the recent resistance level. The target price for this trade is $2.62, the identified support level. This strategy capitalizes on the potential continuation of the downtrend while managing risk with a tight stop-loss. Based on the provided data, the sandbox appears to be in a downtrend. The historical price data shows a consistent decline, with the forecast data projecting further downward movement. The support and resistance levels also indicate a bearish bias, with resistance at 36 cents and support at $0.265. Given this analysis, a bearish strategy is recommended. Enter a short position at the market price when the RSI crosses below $30, indicating oversold conditions. Set a stop-loss order at $0.265, the support level, to limit potential losses. Target a profit at $0.276, the predicted low point in the forecast data. This strategy leverages the downtrend, oversold conditions, and the predicted price movement to potentially generate returns. The analysis of historical and forecast data for Decentraland suggests a potential downtrend. The price has been declining over the past 2 weeks, and the forecast predicts further downward movement. The RSI indicator is currently hovering around $30, indicating that the asset may be oversold. However, the Bollinger Bands show that the price is still within the lower band, suggesting a potential for further downside. Therefore, a bearish strategy could be implemented. A potential entry point for this strategy would be at the current market price of approximately $0.285. A stop-loss order should be placed at $0.297, slightly above the recent low. The target price for this trade could be set at $0.258, which aligns with the forecast price for March 1st. This strategy leverages the potential for a continued downtrend while managing risk with a tight stop-loss order. Based on the provided data, ENG Coin appears to be in a slight downtrend. The historical price data shows a general decline over the past 2 weeks, and the forecast data suggests this trend may continue in the coming week. The RSI indicator is hovering around neutral levels, indicating neither strong bullish nor bearish sentiment. However, the price action has been consistently testing the lower Bollinger Band, suggesting a potential for further downside. Therefore, a short position could be considered. A suitable entry price would be around $0.118, the current price level. The stop-loss order should be placed above the recent high at $0.125, limiting potential losses. The target price could be set at $0.105 based on the forecast data and the downtrend. This strategy capitalizes on the potential for further downside movement while managing risk through a well-defined stop-loss order. Analyzing the historical data and forecast, Uniswap appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, and the forecast suggests this trend will continue. The support price of $7.40 provides a potential buying opportunity. A strategy based on RSI suggests entering a long position when the RSI drops below $20, indicating an oversold condition. The stop loss should be placed below the recent low, around $7.40. The target price could be set at the next resistance level, which is around $8.15. This strategy aims to capitalize on a potential bounce back from the oversold condition. Based on the provided data, Chainlink appears to be in a downtrend. The historical price data shows a consistent decline, supported by the forecast data, which predicts further price drops. The RSI is also below $50, indicating bearish sentiment. A sell position could be initiated at the current market price of $15.40. The stop loss should be placed above the recent high of $18.30 to limit potential losses. The target price could be set at $14.60, the lowest predicted price in the forecast data. Alternatively, a strategy utilizing the RSI could be employed. A sell signal could be generated when the RSI falls below $20, indicating an oversold condition. This strategy would provide a more precise entry point than relying solely on the overall trend. The stop loss would be placed above the previous swing high, and the target price would be determined based on the expected price movement following the oversold signal. Finally, a strategy based on the Bollinger Bands could be used. Selling when the price approaches the lower Bollinger Band could signal a potential bounce. The stop loss would be placed above the recent high, and the target price would be set based on the historical price action within the Bollinger Bands. Based on the provided historical and forecast data, Aave appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, with a significant drop in the last few days. The forecast data also suggests continued downward pressure. Considering the support and resistance levels, the immediate support lies at $171, while the resistance sits at $237. Given these observations, a bearish strategy is recommended. A long position could be entered at $218, with a stop-loss order placed at $225 to limit potential losses. The target price for this trade could be set at $171, aiming to capture the potential downside move. This strategy incorporates the identified downtrend, support levels, and a risk-reward ratio that favors potential gains. Based on the provided data, EOS appears to be in a downtrend. The historical price data shows a consistent decline, supported by the forecast data, which predicts further drops in price. The RSI, while fluctuating, remains below $50, indicating bearish sentiment. The Bollinger Bands are narrowing, suggesting a potential for a breakout in either direction, but the overall trend points downwards. Given these factors, a short position strategy is recommended. Enter a short position at the current market price of $0.569 USD. Set a stop-loss order at $0.584 USD to limit potential losses. Target a profit at $0.549 USD, which aligns with the forecast price and represents a significant downside movement. This strategy capitalizes on the prevailing downtrend while managing risk through a tight stop loss. Based on the provided historical and forecast data, Tron appears to be in a sideways trend with a slight downward bias. The support level around $0.238 provides a potential buying opportunity. A buy signal could be generated if the price breaks above the resistance level of $0.246. We recommend entering a long position at the support level of $0.238 with a stop-loss order placed at $0.235 to limit potential losses. The initial target price could be set at the resistance level of $0.246, with a trailing stop-loss implemented to lock in profits as the price moves in our favor. This strategy incorporates the support and resistance levels as well as a risk management approach with a defined stop-loss. Based on the provided data, Suncoin appears to be in a sideways trend with a slight bearish bias. The historical price data shows a range-bound movement between the support and resistance levels of $0.0165 and $0.0192, respectively. The RSI indicator is hovering around the neutral level of $50, suggesting a lack of strong momentum in either direction. The Bollinger Bands are relatively tight, indicating low volatility. Considering these factors, a conservative trading strategy could involve waiting for a clear break above the resistance level of $0.0192. A buy order could be placed at $0.0193 with a stop-loss order set at $0.0185, aiming for a target price of $0.0205. Alternatively, if the price breaks below the support level of $0.0165, a sell order could be placed at $0.0164 with a stop-loss order set at $0.0162, targeting a price of $0.0155. Remember that this is just a suggestion and should be adapted based on your individual risk tolerance and trading style.